Hello guys and welcome back to our YouTube channel.
In this video, Ryan's going to be talking about NZDUSD and I'm going to be talking about EURJPY for analysis going into next week.
But before we get into that, we would like to say a massive thank you for the 1,000 subscribers. We really appreciate all the support. And if you haven't done so already, please like, comment and subscribe and turn on post notifications so you don't miss any content.
So let's get straight into it.
Hello guys, right, I'm going to be explaining NZDUSD going into next week, starting on the monthly chart, working our way down, doing top-down analysis. So as you can see on the monthly chart, we formed this double top here. And ever since then, price has been very, very bearish. You will see me making impulses to the downside, corrections, followed by another impulses. However, as you can see, this last correction here has been a very overextended and a big correction. And all it was doing is, after grabbing a few orders down here, it was making its way back up to the last lower high in the market, as you can see, which was here. So right now, we can start to see on the monthly chart, we're starting getting pin bars and we're starting getting rejections off this level once again, which is also a psychological level in the market of 0.74. And what this looks like we're starting to do now is forming a double top on the monthly chart from this level to then look for that further continuation to the downside. Now, when I jump in the lower time frames as well, we're able to see trend lines being broken, reversal patterns, and supporting levels all being broken in around this level. So you're just adding more confidence towards this level. Just jump on the weekly chart now. Weekly chart, right. So we had our weekly uptrend. If I can just push this down a bit. Yeah, we had our weekly uptrend. So once we rejected that lower trend line here, we then had a massive impulsive move to the upside. And as you can see, we were very, very bullish. Now, it looks like this has come to the end. Why has it come to the end? Because our trend line has now been broken and we formed this evening star on a weekly chart. We had these two dojis here and then boom, all of a sudden, a bearish engulfing candle. And look at this engulfing candle wiping out all these previous weekly candlesticks that are approaching this area in the market. We can see also here where price had that big push to the upside, a pin bar, grabbing those orders at this 0.74, grabbing those orders at that trend line, and then now we're seeing this reversal. So bringing that higher time frame confidence, we can now add that into our lower time frames to try to pinpoint that perfect, not perfect, but a best entry for this pair. So let's jump down on a daily chart now. And this way it comes a lot more clearer. We can see price action in a lot more depth. We can see here, price is starting to make this head and shoulders pattern. The left shoulder here, very nice level. Left shoulder, boom, came back. We found support here. Came back, used support again. And then boom, what do? We get that push, that grab at that psychological level. And then boom, you see that reversal. And then boom, what do we happen again? We come back and retest the neckline. And then we pushed off that again and gave us that right shoulder. So what this is just showing to us, that price is in bearish market structure. Now we've broken a weekly trend line. We retested it. And now that formed our right shoulder. And now we've broken the neckline with this beautiful bearish engulfing candle. And now what we're going to look for is this break and retest of the head and shoulders off the neckline. So how we look to enter this pair is looking for that pullback back up into this region. Some sort of correction back up into here. Look for that retest of support, turn resistance, and then look for that further continuation to the downside. Other things we're looking out for as well, we can also see that we have formed a downtrend. So we might be even more cautious with that, thinking that we might have a touch of that trend line as well, depending on how we correct. All these things are going to play into part. We can then draw in our Fibonacci as well from swing high to swing low. We might be looking to come back and retest to 50% and might find some trouble at the 38.2. But looking like the 50% is going to be beautiful because it ties in nicely with this neckline. And obviously insurance stops in a safe position. We could potentially even pull back to the 61.8. So if we were to look to enter this pair, we're going to need to ensure stop loss are in a safe position way above the 61.8, just in case we come back and tap into this area here, which it can well and truly do, as this is a nice area of support and resistance where we had that slowdown and all of a sudden we had that shift and sellers stepped into the market. So there could still be some orders at that level. So yeah, let's jump on the 4 hour. There's not really much happening on the 4 hour. It's just a lot more in depth. We can see how price had that massive impulsive move to the downside. We can see where it had that slowdown, like I just mentioned on the daily. We had those dojis, and then all of a sudden we had that massive surge to the downside. So we might potentially be able to catch some day trades back up to this region, up to the 50%. But that will come more clearly and transparent into next week. But our overall sort of swing trade will definitely be the sell of that neckline there, and obviously looking for the 1.27 Fibonacci extension, or even a 1.64, and catching a beautiful, nice swing on this trade. So yeah, this is NZDUSD going into next week. A flip on the higher time frames, now forming some bearish market structure. We got a beautiful head and shoulders pattern forming here, a downtrend forming, area neckline which is broken, and now we're waiting for that retest. And yeah, it should be a beautiful swing going into next week. So yeah, this is NZDUSD going into next week.
Right, guys, so I'm going to be talking about EURJPY, starting on the higher time frames. We're going to do some top-down analysis just to get an idea for this pair going into next week. So starting on a weekly time frame, what we're going to look at is just the structure of the market and how we shifted from bearish to bullish. As you can see, the market was downtrending, forming lower lows and lower highs, forming bearish market structure and making double tops, and just continuing with market structure, breaking through support, retesting it as resistance, so on and so forth, until we came to this psychological support level down here of 116.0. So clearly price failed to break through here. Buyers stepped in, not allowing sellers to break through this level. They stepped in, and as you can see, we impulsed to the upside, creating a higher high in the market. And then ever since, on the higher time frames, buyers have just been dominating the market, and we've just been uptrending. And I feel like what we're doing is we're just going to continue uptrending until we potentially come back up to this resistance level again. So for the meantime, buyers are in control on the higher time frame. We're clearly bullish. Looking at the weekly candle from last week, just to give us an idea of how last week ended, we can see that we do have a nice wick rejection to the downside, as well as a wick rejection to the upside. However, so it closes like a doji, so there's no real bias on that candle. So it's a doji, so basically anything can happen, but it's nice to kind of know that it's not a selling dominating candle. It is quite neutral, but going with the higher time frame, it goes to show that it will kind of back the buy bias that we do have on this pair. So that's the daily time frame, sorry, the weekly. Let's drop it down to the daily. So what can we see go on this time frame? Again, very bullish market structure, but we're very just interested in what's going on over here. So as you can see, price was moving very bearish last week. For the first couple of days, we can see strong bearish candles. However, you can see that once price reached this support level in the market through here, as you can see, it's been used as resistance there. We broke through, we used it as support, and then buyers stepped in massively. We can see we come back down to this exact same level, and sellers failed to drive through this level, and buyers just stepped in again. So we can say that on this daily market structure and on this daily time frame, buyers are in control. We can see we form this nice morning star pattern, strong bullish engulfing candle, basically just buyers dominating on the daily time frame. We'll jump down to the lower time frame to see what's going on as well and what actually happened in a bit more detail. So let me get rid of this trend line just so I can show you what actually happened. So what was price doing? Well, what we originally had for this pair was somewhat a sell bias and somewhat a tilted head and shoulders pattern. So if I just show you, you'll be able to visualize this in a second. So if I was to say that this right here is the head, this right here is the shoulder, is the left shoulder, and this right here is the right shoulder, we can then say we connect the shoulders for it to be tilted, somewhat like that, and we also connect, let's say, a vague neckline like that to be the tilted neckline. So we can say this is potentially forming a tilted head and shoulders pattern. And as you can see, sellers tried to retest the neckline. You can see here where sellers tried to step in, and you can see it's even retesting previous structure. It's retesting previous support as resistance. So what could have happened from this moment is sellers could have easily drove the market below this level. But what actually happened is buyers at this level down here, as we previously spoke about in the daily time frame, buyers at this level were just too strong. So they drove the market higher. And as you can see, which I'll drop down to the lower time frames, is that we formed like a triple bottom. So you can see we were impulsing to the downside, we were pulling back, we were impulsing to the downside, and then we formed this somewhat corrective structure. But then you can see that we've now impulsed to the upside, and we've actually formed a triple bottom. So we've got the 1, we got the 2, we got the 3, where sellers tried to break through, but buyers are just counteracting and buying into the market, not allowing them to step through. And as you can see, we've now impulsed to the upside. So buyers have clearly stepped into this market. If I just get rid of these now, just to make it more clear. So we can also visualize this by drawing in a trend line, just to visualize the direction of the market. Connecting it like that, we can say that we have now broken and we are now in bullish market structure. So what are we going to be looking at going into next week? So we've now made this impulsive move, and we know after an impulsive move what follows a corrective structure. So what we're looking for is a bearish correction back down into these key levels, back down into this level of resistance to be used as support. As you can see here, we've got previous level of resistance that we're looking to be used as support. Now, I could also draw on, for example, a Fibonacci level, Fibonacci retracement from swing low to swing high to see what levels we could pull back to. So it's looking like we could pull back to the 50%, the 60, the 61.8. And with worst case scenarios, we would say potentially the 78.6. As you can see, there is these wick rejections down here, a level of support. So with that being said, we need to ensure that our stop losses are below this level. So if we're looking to enter the market, let's say around in between the 50 and the 61.8, we know that there's a possibility for price to pull back to the 78.6, which lines up with this level of structure. We need to make ensure that our stops are clear of this level, just in case, worst case scenario, price does decide to pull back. And in terms of targets, we'll just be looking to target previous structure. So potentially this previous structure, targeting there, and then going forward and maybe a little bit higher, we could look to trail our stop loss up to there or take partials, whatever the sort. But yeah, buy bias going into next week on this pair. We're looking for a bearish corrective structure to form, and then our entry signal to allow us to pull the trigger, ensuring our stop losses are below this structure, targeting key levels, not being greedy, taking profits at some key levels. But yeah, this is EURJPY going into next week.
Thanks, guys, for watching our video. We really appreciate all the support.
If you want to get involved with us and have some guidance along your Forex journey, all the links to our groups and everything we provide are in the description below.
So see you next time.